Teck Resources reiterated its opposition to Glencore's takeover bid in an investor presentation today, calling the proposal risky. Our next guest says while they don't think the deal will happen, they did note it's nice to be wanted and thinks that this could help the share price. Let's bring in the Managing Director of Equity Research for Wolf Research, Timna Tanners. Timna, thanks so much for making time today. I wonder what you make of this pushback that we heard from the CEO to this proposed takeover offer.
Yeah, great to be here. And I think, yes, this morning, Jonathan Price, the CEO of Teck, came out swinging and came out with a definitive no thank you to the Glencore offer last week. There wasn't really any room for discussion. They came through at several points I thought were pretty well taken regarding, the greater risk of a combined entity, the unattractive relative valuation of Glencore, and several other points that I think resonate with the investors that I've spoken to.
So you don't think a deal is going to happen, or that this deal is going to happen? Is that just now or ever? Do you think it might come back in some sort of different form?
I don't think you can rule it out. I did ask the question. I felt a little obnoxious. They went through and gave like a very comprehensive presentation on all the reasons they don't like the proposal. And then I asked, but would you like it in a different scenario? Like, what if it were more money, or what if it were sweetened somehow? And, I can understand that's a tough one for them to answer. And sure enough, they said, if they can't rule out, what the board might do, but this proposal is DOA, right? And so I think that, if it were sweetened somehow, we could see it revisited. But there is a deadline, right? There's the next 2 weeks and change before Teck's vote on its coal separation, which is kind of the deadline for any decision on it.
Yeah, well, I kind of wondered if that might actually open the door to something else potentially, because if let's say Teck does go through with the separation of its company into these two parts, if the investors do approve that, then could there be some other takeover offers on the table potentially for, either of those two companies?
So yeah, taking a step back on the vote coming up, that's requires 2/3 approval from both the Class A and the Class B shareholders. Glencore has said that if this split, the coal division split, is approved, it will walk away. However, I guess there's a chance that the split is not approved, and I don't really know how that happens from what I can tell here and now, as it stands. But if the deal goes through, then Glencore walks away, but the coal entity has, I guess, the potential to be acquired. You still have a big chunk of all the cash flows being diverted to Teck Metals, I believe is the name of the remaining entity. So we'd have to wonder how attractive that is, at least until that debt is paid off.
Right. But then the copper side of the business, do you think that is going to be, become more attractive if this does go through and, things are separated in that way?
So if you have the base metals entity and the coal entity separated, you still in the base metals entity would have the dual share class structure intact. So you'd still have to have the Class A shares want to approve a takeover. And in the Canadian press, it's been pretty clear that at least one large shareholder has not been open to a sale. So that would have to change.
Yeah, no, that is true. There's been some pushback on that for sure. That's been put out there. So, okay, when it comes to your price target for Teck Resources shares as they are now, you still see the potential for shares to rise from here. And I'm curious if that also takes into consideration your assumption that the deal wouldn't go through, that Glencore wouldn't be buying Teck, but you still see the potential for them to gain from here, because it seems like Teck Resources shares have benefited, at least from the discussion around all of this.
Yeah, absolutely. So, obviously the bid, puts a stark number out there and a value that people can hang on to. And our price target is calculated kind of a sum of the parts on how we see the different components of the business looking out to 2024. So the moving pieces there is that Teck, of course, is growing substantially its copper business. It should be double what it is today on an annual basis by 2024. And you should see, assumedly, the coal business shrink, not just because of the stripping out of the bigger copper component, but also the coal price is forecast by most of us to decline substantially. So if you put as some of the parts there, you have a bigger valuation ascribed to copper, something like 8+ times EV/EBITDA, and on the coal side, 3 times EV/EBITDA. So our assumption is that without the deal, you still have the valuation improving over time with that mix change I just mentioned.
And when it comes to the industry and the activity that's been happening, you noted recently that the number of copper deals have jumped 30% year over year.
Yeah, that just comes from data, and I think it's from a pretty low point, but there's been quite a few copper transactions. And, if you really look at them, the bulk of them have been focused on smaller entities, right? So not big, splashy, acquisitions, but there's quite a few growth projects out there that could be compelling, especially if you think about how much inflation has been weighing on the space. So if you have one that's already well underway and at the right valuation, could be pretty compelling for larger entities.
Timna, great to get your analysis on tech and on the sector. We really appreciate it.
Around the majors, we have seen lots of changes as well to help baseball compete with other sports. A big focus on shortening games to attract younger fans, for example. Still, even though baseball has plenty of competition and is trying to stay relevant, team owners are doing pretty well. According to Forbes, the top 5 valued teams in the league saw an average 13% jump in valuations in the past year. Bob Boland is a sports law professor at Seton Hall University Law School, and he joins us now to talk about the business of baseball. Bob, always nice to see you. And, the league commissioner is very calculated. He took a lot of time. Baseball moves slowly with change, but this year there were a lot of big changes, which I imagine fans are going to be seeing over the course of the year.
Yeah, 3 big changes will be ushering in this year. Obviously, the pitch clock that will penalize pitchers who don't pitch fast enough. The no shift provision that will keep players on an even number on each side of the diamond. And then finally, the wider bases that will make getting on base easier, but also making getting outs easier along the way and maybe avoid some injuries, all of which to move the game along and make it more consumable.
It's so interesting. Even if you weren't a baseball fan, the Moneyball era and sort of the analytics of the game became a Wall Street obsession. But what did it do to the sport vis-a-vis some of the other ones in professional sports world?
Well, Moneyball probably, the idea of analytics in baseball probably created some of the problems that we need to correct from right now with the pitching changes, the shifts, and the ability to change pitchers to face only one batter in certain circumstances, created much slower games, much more calculated games, and really kind of probably made the product a little tougher to consume in the same way that we would like to. We've already moved away from a lot of day baseball that makes it widely consumable by young people. We were trying to sell it to a specific audience, and we were slowing it down and making it harder. And I think one of these moves this year are calculated to end that tide and try to get some of those people back that have been lost by the pace of play challenges over the last decade.
So sticking with calculations, I would imagine if you're stuck at the ballpark for a long time, maybe you get ants in your pants and you get turned off. But it's also a big revenue opportunity. People buy a few more drinks, maybe a couple extra hot dogs. Does that pitch clock tighten the window to get all those concessions sold?
No, I don't think it does. I think it actually probably motivates people to consume a little bit more earlier, to enjoy the game a little earlier, and to take advantages, obviously some of the new changes in the park in Toronto, to make changes to consume the game slightly differently in more flexible space with a higher per cap, but maybe a lower ticket price and maybe a little bit better experience. So I think we watch baseball differently than we did in the 1950s and 60s. If you look at any picture, you can see that. But I think the new parks and the game are moving to kind of capture that and to make it an enjoyable, action-filled game as opposed to one with long delays and a lot of trying to leave your seat. So I think it's a good balance they're trying to strike.
Well, let's talk about team valuations because, in the markets, we look at the market caps of companies. You referenced the Toronto Blue Jays, which, according to Forbes, are worth at least $2 billion US. You've got the New York Yankees at the top of the list, valued at more than $7 billion. Even without these changes, which obviously are important when it comes to staying relevant, are team owners sitting pretty right now, Bob?
they're very comfortable. Obviously, their products and teams have gained. Although baseball is unique among the North American sports, maybe not the only one, but where the top is so different than the bottom as you think about it. So the idea that it's very important to be in the top tier of teams in terms of revenue than to be at the bottom. So it's a very important thing to think about. And you always want to stay in that top tier, matching your market size, your stadium, and your competitiveness.
Okay. In terms of what this ultimately will do for the sport of baseball, all these changes this year, do you think it will help the game when it comes to being competitive?
It's already shortening games, and that's probably a win in itself. It will probably make games a little easier to commit to go to, and I think it'll keep the action up. And I think it will keep the joy in being taken out of games by prolonged delays. So I think it's good all around, and I think they've been greeted fairly well. It'll certainly be the defining part of Rob Manfred's commissionership.
All right. Yeah, he obviously spearheading a lot of these changes slowly but surely. Bob, thanks for your time.
Ukrainian Prime Minister Denis Shmyhal was in Canada to meet with the Prime Minister and Canadian business leaders. The two countries have signed bilateral agreements to expand free trade. Speaking with our Andrew Bell, they focused on the impact of the war on Ukraine's economy and its vital commodity exports. Here's more from that conversation.
For now, we lost more than 30% of our GDP, and we lost some of our industrial facilities on the occupied territories. We lost the biggest in Europe nuclear power station. We lost the biggest in Europe hydropower station on Dnipro River. And unfortunately, we lost more than 3 million of jobs for our people. So these losses are estimated by us, by World Bank, in amount more than $400 billion US. And it's a huge amount, but it's only on the controlled territory. Unfortunately, we don't know which losses we have on the occupied territories, and I think that this amount will be double. So because of this, we ask for confiscation of frozen Russian assets for future recovery of our country. And we understand that we will lose GDP, we will lose temps of our development, of our increasing, and all of this should be compensated by Russians. Ukraine was food hub, as all the world can see right now. So agriculture is one of the main industry for Ukraine. Now we have blocked seaports, now we have problems with logistics, and it has direct influence on our economy. We also have difficult logistics for our metal and ore producing industry. So, and again, it's the next one sector which have the biggest losses because of this aggression and problems with logistics. So all of this describes the current situation there in Ukraine, but we have encouraged to recover all of this. We develop now special programs, grants, and special loans for small, medium, and micro business to create a huge quantity of jobs for many Ukrainians.
Can I ask you, there was a deal whereby your agricultural exports could go out from Black Sea ports. Are they still getting out okay?
Unfortunately, just now Russians are blocking this corridor, but until now we could export 50 million tons of our grains through this Black Sea corridor and railroads to the European Union. So it's enough for export our grain for the 2022. But now it's time when we will begin have a new one harvest in our country, and we should supply this to the African, Middle East countries, European countries, which are waiting for this food.
They depend on it.
But Russia continue block this logistics for this food products, and they make direct influence on food security, on global food security. Unfortunately for us, we hope for negotiation from side of our partners, from UN, and that they will press on Russia and they will open this corridor and we will export our grain.
Can I ask about the impact on your labor force? So your population is roughly 43 million, but Poland says 11 million Ukrainians passed into that country. So how much of your labor force has been lost? I mean, how much is in the military right now? Can you give me a rough estimate?
So statistics is as follows. About 7 million people are internally displaced persons. They are in Ukraine, but they are displaced from east part of Ukraine, where the battlefields are going on, to the west part of Ukraine. About, according to the UN estimations, about 4 to 4.5 million people are refugees in the European countries and all around, and thanks to Canada for hosting more than about 200,000 Ukrainians right now. So 4 to 4.5 millions are refugees. And many people go to the defense forces and they now on the front line or in the military forces. So it makes tremendous influence on our economy. I mentioned about 3 to 3.5 millions of jobs Ukrainian economy lost because of this war. It brings us to the 30% of our GDP decreasing.
30%.
30%. And then, unfortunately, it has direct influence, but we have financial support from our partners. It led us to be absolutely stabilized in sense of macro financial stability, in sense of banking system stability, in sense of currency rate stability. So banking and macro financial system is stable despite the war, despite the losses of GDP and our economy. Thanking to support of our partners and including Canada.
What about your metal exports? They're pretty significant. Pig iron, steel exports. Have they been cut off, or are you still managing to export those?
Unfortunately, metal industry and metal sector lost the biggest numbers because this logistics was possible only through the seaports. Now it's blocked. And number one loss is more than 60%. It's steel industry and metal ore industry. And the second place is, in fact, agricultural losses because of blocking of this corridor. So two main fields are now in trouble because of this aggression and because of Black Sea ports blocking by Russians.
I've read that something like $300 billion worth of Russian assets outside that country have been seized as part of the sanctions campaign. Your country, I guess, wants to get hold of some of that money. You feel you're entitled to it.
I always say that not Canadian, not American, not European, and not Ukrainian taxpayers shouldn't pay for these damages and losses which Ukraine has during Russia full-scale aggression. Russian Federation should pay and should reimburse all these damages and losses. And the big amount from $300 billion to $500 billion dollars US are now frozen on the different accounts all around the world. So now we are working, and we ask Canada support us in this sense, under creation of international mechanisms for confiscation of seized Russian assets. And it's very important that Canada makes this first precedent and adopt national legislation for confiscation of frozen Russian assets of Russian oligarchs. And now we work with other partners to create this national legislations, create this international agreement, create a register of losses, international register of losses, international commission for losses, and international fund for compensation of losses and damages for Ukraine, for our future Marshall Plan for Ukrainian recovery.
I'm glad you mentioned that, the Marshall Plan. That was the US program of reconstructing Europe after World War II. But what I've read, World Economic Forum, World Bank, the amount of money that's going to be needed for your country, even in inflation-adjusted dollars, will be much bigger.
So if you compare Marshall Plan's amount, it was $13 billion US. It was 2% of United States GDP on that time. So for now, 2% of United States GDP is 500 billion US dollars. And it's comparable with this amount according to the World Bank estimation, $411 billion according to their estimation. So we can compare needed amounts, but we understand that it will take some years. It's not for first year we need this money, and because of this we count that we will have international mechanisms for confiscation of frozen Russian assets and for investment of these assets into the Ukrainian economy, into the Ukrainian infrastructure, to the transparent and accountable international mechanisms.
And could you just very briefly talk about the any economic decisions that were reached today? I know there was a lot of military aid pledged, but on the economic front, what was achieved by your visit to Canada?
First of all, we are very grateful to the people of Canada, to the government of Canada, to Prime Minister personally for tremendous support from the first day of this full-scale aggression, and we have support in all sectors. In military sector, in financial sector, in sanctions, in all of the directions. Today we discuss military support. It's natural because we are preparing for next stages of our counteroffensive. Today we discussed economical issues, sanction issues. Today we have very fruitful meeting with Canadian businesses, with big pension funds, with banks, with investors, with companies. Today we signed many agreements. The #1 agreement about free trade agreement between Ukraine and Canada. It's the most modern free trade agreement. It covers not just trading by goods, but also services, investments. It's cover relation in humanitarian sphere, in green energy sphere. So it's very modern agreement which will let us to be very effective into our bilateral cooperation. And for businesses, it's very important because it opens possibility not only for big businesses, but also for small, medium businesses, for cooperation between entrepreneurs, small entrepreneurs. And today we discuss also possibility for cooperation in different spheres, and especially in energy sphere. And to our companies, Energoatom, it's Ukrainian state nuclear company, and Cameco company, Canadian company, sign agreement about cooperation in nuclear fuel and uranium, cooperation in this sphere. It's very important because it is not just a signal, but it's beginning of very concrete cooperation between our businesses and creation new kind of our economical relations on the next level stage, I would say.
Some breaking news from Teck this morning. Teck Resources announcing that its board has decided to unanimously reject Glencore's revised unsolicited bid, a revised bid that was received by Teck's board on April 11th. The board issuing a press release this morning saying that Glencore has made two opportunistic and, quote, unrealistic proposals, and they say that would transfer significant value to Glencore at the expense of Teck shareholders. So they say there are several reasons why the board has decided to reject this revised proposal. The key factors include, they say this would include destruction of value. It would also not address material risks. They say it would expose shareholders to significant jurisdictional risk. And they say there are also significant execution risks. So that's just some of the factors that they identify. There are many, many more. So we'll, of course, be reaching out to Glencore for a reaction to that today. Once again, the breaking news this morning, Teck Resources Board of Directors has decided to reject the revised unsolicited bid from Glencore, which it received just, I suppose, a couple days ago. All right, let's go now to Barrick Gold, which is another stock that we'll be watching today after the gold miner announced quarterly production numbers that came in below estimates. For more on this, we're going to be joined by Jeff Morgan. Jeff, thank you so much for joining us. Curious, what accounts for the fact that they missed their estimates?
Yeah, estimates, well, the production numbers were lower. The company does expect to be able to ramp up that production over the course of the year. But we have National Bank out this morning saying that the guidance is light. So this is a company that, despite the fact that its production is lower, gold prices are currently over $2,000 an ounce. And so we're seeing across the gold mining space this morning, the stocks are up. Barrick, because it has a U.S. ticker as well, we do get a little bit of a preview of what might happen when trading opens in Toronto. And the stock is up this morning, along with other gold miners. So, lucky for them, you can miss your production estimates and your stock still rises. But the reason why gold is up this morning, it's on this macro expectation. We've had some inflation data, some GDP data out of the United States. Traders betting that the end of the rate hiking cycle could be near, and gold, of course, being both an a hedge for inflation, and also sometimes a hedge for recession, a store of value. So there are two reasons why people are buying into gold and gold prices over $2,000 an ounce.
One of the reasons why investors may not be totally turned off by the miss this morning is that Barrick did note that its gold production is expected to increase throughout the rest of the year. Tell me about some of the dynamics that are at play that will lift their production.
Yeah, so Barrick, does have some additional production coming on this year. They also they expect that they're going to achieve the midpoint of their guidance. And also their copper guidance here. Just kind of trying to go through a few of the details. I would say what analysts are looking at here is a ramp in production as the year goes on, and so the first quarter miss, or the miss that they've just posted, they do think that this is going to be in the rearview mirror in the next couple of quarters.
All right, thank you so much.
Okay, we've got this Friday fade going on right now. Financials are still holding on to their gains, but one by one, sectors are being picked off. And even some of the vulnerable within the financials group, take a Wells Fargo or a PNC Financial, which initially were trading up on the back of quarterly results, have now slipped into negative territory. And it's really just JP Morgan that's holding on to the gains. Let's bring in Mike Regan, senior markets editor at Bloomberg News, joining us now. Mike, there were a lot of reasons to watch the banks. How are they doing amidst the crisis? What are they telling us about the economy? And while some are trading up, the economic data that is trickling in is kind of skewing more to the negative side. How are you thinking about that narrative?
Yeah, I think that's true, Amber. I mean, I think we're getting just further evidence that on the good side, inflation does appear to be moderating. The import price index and export price index back up that idea. Both fell more than economists estimated in this last report, negative 0.6 on a month-over-month basis for imports and negative 0.3 for exports month-over-month. Retail sales also were negative 1%, weaker than estimated. Our Bloomberg economist Eliza Winger pointed out that about 1/3 of that drop was from vehicles and vehicle parts. So that's obviously a very rate-sensitive sector of the economy. So she's saying, look, these rate hikes are starting to hit the consumer. And she also pointed out the spending on restaurant services was basically flat month over month, which may hint at a larger slowdown in demand for that broader services economy. This according to Eliza Winger, our economist, who says really it sort of reinforces and increases our economists' expectations for a recession later in the year, Amber.
And against that backdrop, we're still trying to figure out what to do with inflation, with the very mixed picture and people being able to cherry pick the data they want to confirm their own narrative. And of course, there's a Fed speak on top of that.
Yeah, and one important inflation data point, in addition to the import-export index, is that University of Michigan Consumer Confidence, the inflation expectations element of that report. And for one-year inflation, that ticked up pretty noticeably higher to 4.6%. That's something the Fed watches very closely. So it is kind of an outlier considering what consumers expect of inflation versus what the in-the-books numbers are telling us. So it is a bit troubling that consumers are bracing for higher inflation. We did hear from Fed Governor Christopher Waller. Now, he is a hawk. He's not the most hawkish member of the Fed, but he is considered hawkish. And he's saying, look, the Fed has more work to do. He said basically because financial conditions have not significantly tightened, the labor market continues to be strong, and inflation is still far above target, that he thinks another rate hike or more rate hikes are in order, unless he sees evidence of problems in the credit market that would maybe change his mind. I will point out, Amber, the Fed funds futures are pricing in an 85% chance of a rate hike in May. That's up pretty significantly from yesterday when the probability was about 69%. So not sure if it's Waller or maybe that huge rally in the stock market contributing to the notion as well that the market is sort of leaning into the idea of a rate hike in May.
All right. Thanks so much. That's Mike Regan joining us from Bloomberg.